Very good evening. So, hearty welcome to all the participants for the Masterclass series on Income Tax Act 2025. So, this Income Tax Act 2025 is a very welcome move which will enable the country to progress towards a simple tax system. So, when we have the simple progress tax system, this Income Tax Act requires some orientation. This Income Tax Act 2025, when we talk about the orientation, so how it will benefit the society and the country at the large, so will give us a lot of orientation. So for the academicians, for the students, and for the stakeholders, so the few of the professional members, we decided we will conduct some small sessions or special sessions of shorter duration of 15 or 20 minutes each on small topics so that the participants will be able to understand the important provisions with regard to the Income Tax Act 2025. So without much delay, let us start the introductory class today. So when you look at the Income Tax Act 2025, the government started it some 2 years back. So it got approval of the President of India on August 2025, during our August 2025. So it is effective from the 1st April 2026. So it simplifies the language, redundant words, ambiguity terms have been removed. It removes obsolete provisions, the provisions which are not relevant to the current times, which are completely redundant or which are obsolete, are completely removed. And then it consolidates and restructures the provisions. The concept of tax year has been introduced, replacing the word assessment year in the previous year, which we have been using it from 1961 onwards. So from the year 2026-27, we'll be having income tax year, or we call it as a tax year. So the virtual digital assets, including the cryptocurrencies and the tokenized assets, have been completely, it has been defined, the meaning for the word of virtual digital assets and the token assets. From the complexity to clarify, it is a rationale behind the Income Tax Act 2025. So it's a very simple framework. The word simple, expansion for the word simple is streamlined, integrated, minimized litigation, practical and transparent. So we call it as a simple framework. Moving on to the timeline or the journey of this Income Tax Act 2025. On February 13, 2025, the original Income Tax Act was introduced. The bill, we should call it as an Income Tax Bill 2025, was introduced in the Lok Sabha, and then again a parliamentary committee was formed, or a special committee was formed with the MPs across all the political parties' representations. They had a discussion with the stakeholders. They invited suggestions from the industry, from the taxpayers, and with the experts. And they submitted the report to the Lok Sabha. Based on the recommendations of the committee, the old bill, which was introduced in the month of February, was repealed, or it was taken back from the Lok Sabha. And then the new bill was introduced in the Lok Sabha. Income Tax Act 2025, Bill number 2. And then in the month of August, it was passed in the Lok Sabha as well as in the Rajya Sabha. On August 21st, it received the assent of the President of India, and then it was published in the Gazette of India, making it effective from April 1st, 2026. So this is a journey of the Income Tax Act 2025. So what it speaks about, the streamlined tax structure. So total number of sections when compared with the Income Tax Act of 1961, it has been reduced from 819 to 536 sections. The chapters in the Income Tax Act is reduced from 47 to 23 chapters. 16 schedules have been introduced. The concepts of tables and formulas have been introduced in the Income Tax Act 2025 to give clarity and ease of interpretation to the end users and to the stakeholders. So this will give us a comparison of the Income Tax Act 1961 and the 2025 Income Tax Act. Or why we call it as a proposed bill is at the time of no bill, this comparison was issued. So words 50% almost is reduced. Chapters from 47 to 23. Sections from 819 to 536. There is a reduction. Schedules have been introduced to give more clarity. Tables and formulae have been introduced for better understanding for the end users. What are the core objectives? So when you talk about the core objectives, simplification, it replaces archaic language and redundant provisions with clear, concise, and modern legal text. So the words are made it very clear. Like today, having very complex words or very redundant words. So that has been removed. So we are having a clarity with regard to the words. So the second part is digital integration. So when you talk about the digital integration, is it enables faceless assessment and digital compliances. So when you talk about the digital transformation, today government is having a faceless assessment scheme or faceless assessment process, even with regard to the processing of income tax returns and other relevant forms. So the human interface and the intervention is completely reduced, and the government is aiming at zero corruption. Taxpayer-centric approach. It improves the ease of filing the returns. It reduces litigation, and it enhances transparency. So again, when you talk about the transparency, see, when you have very clear terminologies, we'll be able to have a better understanding of the objectives of the act. Very easy terms, technical terms will be made very simple. Explanations will be made very simple. So automatically the litigations will be kept at a very bare minimum. And having a very transparent transactions will help us to ensure that, yes, the government is aiming at complete e-governance. Global alignment, it reflects contemporary economic realities, including taxation of digital assets and global income. So when you talk about the global taxation or the international taxation, the global domains such as the cryptocurrencies or the virtual digital assets, across the globe, various countries have started new areas of levying tax. So which is also considered by our government of India. So they have brought in the taxation of digital assets and the global income in a more very effective and a uniform manner. So structural changes, if you look at one of the major structural changes, the implementation of the word tax year, which will replace 60-year existing word previous and assessment year. So the new act will be effective from 1st April 2026. which will be effective on the income earned in the tax year 2020, 26, 2027 and onwards. So the word tax year, let us understand how it operates. So for the financial year or the previous year, 2025-26, for the period from 1st April 2025 to 31st March 2026, Income Tax Act 1961 shall apply. So for the current financial year, we will have the assessment year as 2026-27. However, 26-27, we will have the assessment pertaining to the 26-27 called as tax year henceforth. So we will not have the concept of previous year and assessment year. So from the year 2026-27, whatever income you earn in 26-27, the assessment will happen from April 2027. Again, we'll be referring the year as tax year as 2026-27. So going forward, we will have the concept of only tax year. For the teachers, for the students, from 1st April 2026, how to proceed with regard to the handling of the income tax provision. So when you teach in the academic year 2026-27, so we'll be teaching with regard to the assessment year of 26-27, maybe for the September professional exams, June professional exams, and the November or December examinations. The relevant assessment year will be 2026-27. Post March 27, any examination conducted, we will have tax year 26-27 as our benchmark. So this is one thing which we'll have to note with regard to the tax year. So one of the major structural changes having the concept of tax year instead of the word previous year and assessment year. And we'll be following the global best practices. Now, what is a tax year? A tax year is a period of 12 months contained in a financial year commencing on 1st April. So this is one major change. So again, let us go through these two concepts. So for the financial year 25-26, we'll have the assessment year as 26-27. Whereas from the financial year 2026-27, we will have only tax year. Even when you do the assessment 1 year later, we'll be referring the year only as tax year 2026-27. So this is one of the major welcome moves. Next is the chapters in the Income Tax Act of 2025. The chapterization, we have got around 23 chapters, so which are prevalent. Chapter 1 is preliminary. Chapter 2 is basis of charge. Chapter 3 is incomes which do not form a part of total income. Chapter 4 is computation of total income. Chapter 5 is income of other persons included in total income of the assessee. Chapter 6 is aggregation of income. Chapter 7 speaks about set off or carry forward and set off of losses. Chapter 8, deductions to be made in computing the total income. Chapter 9, rebates and reliefs. Chapter 10, special provisions relating to avoidance of tax. Chapter 11, general anti-avoidance rule. Chapter 12, modes of payment in certain cases. Chapter 13, determination of tax in special cases. Chapter 14, tax administration. Chapter 15, return of income. Chapter 16, procedure for assessment. Chapter 17, special tax provisions for other certain persons. Chapter 18, appeals, revisions and alternate dispute resolution. Chapter 19, collection and recovery of tax. Chapter 20 is refunds. Chapter 21 is penalties. Chapter 22 is offenses and prosecution. And chapter 23 is miscellaneous. So this is the chapterization in the Income Tax Act of 2025. So when you again talk about the basic concept of residential status, so if you if you would like to have the word residential status here, section 6, it remains the same. So the residential status must be determined separately for each tax year, since the number of days of stay and other conditions may change from year to year. For an individual, the residential status could be resident or ordinary resident. So we will call them as resident but not ordinarily resident, or NOR. The third category will be non-resident. So the basic conditions is, in India for 182 days in the current tax year, or 60 days in the current tax year or the relevant tax year, plus 365 days in the preceding 4 tax years. So if any one of the conditions are satisfied, it becomes the applicability for resident. And then you will go for the additional conditions to determine whether not ordinarily resident or an ordinary resident. So it could be a resident or not ordinary resident. Any person who is not satisfying both the conditions, basic conditions, so automatically he will become a non-resident. So what is the importance of relevance of this resident and non-resident? So for the resident, global income becomes taxable. For the non-resident, only the Indian income becomes taxable. So this is the scope of determining the residential status for the individuals. Again, citizenship and residential status are completely different. So the section remains the same. Section 6, it remains the same. So for an individual, resident but not ordinary resident, and non-resident will be the category for residential status. So in the next masterclass 2, we will be discussing on the applicability of residential status and the scope of total income. So where let us discuss on a few examples on the determination of residential status and the scope of total income. So thank you so much for being with us. Since there are no questions which are being raised by the participants in the chat box, so we thank you for being with us. So stay tuned with us for the enrichment of the knowledge on Income Tax Act 2025. Thank you.